Hello, everybody. This is Bob Brooks, host of the Prudent Money Radio Show. I want to talk to you a little bit about the program today. We talked about what happened in the stock market and what a big day it ended up being, all because of President Trump's announcement that there would be a 90-day pause on setting up trade agreements with 75 different countries. So, that a little bit unexpected. The market liked it and took off and never looked back. We'll talk about that and why that, kind of what to expect going forward as we enter into a real volatile time in the markets. That's all today. And if you got a question for me, please go to the website at www.prudentmoney.com. Send it in. I'll get you taken care of. If you also can send me an email at info@prudentmoney.com if you'd rather do that as well. That's off the website, www.prudentmoney.com. Well, enjoy the program.
Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, a few observations of the market and this trade war. Today, we'll take a look. Stay tuned for Prudent Money. Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. If you've got a question for me, please go to the website at www.prudentmoney.com. Once you get to the website, just go up to the top of the page and there is a link, Ask Prudent Money. Just click through, send that email, and we'll get you squared away. It's a great way to get information, and it's a resource that was put together especially for you who listens to my radio program, reads the blogs and things that we send out, and just tries to understand what all this stuff means. So that's off the website, www.prudentmoney.com. You know, one of my objectives is to, throughout the day, keep up with obviously what's going on with the markets and with the economy, and just lately keep up with everything that's been happening with this trade war situation. And then come on to the radio and try to make some sense out of it. Why the market did this, why the market did that, and why the economy is acting this way, and why did this economic number come out like it did. And try to make some sense of the questions that come up. And the challenge always is that we're talking about money, we're talking about the economy, talking about stock market, and it's just confusing. And it's hard to understand why certain things happen, why some certain things don't happen, what things mean. And so we do our best. I know that I do my best to explain just over the radio what all of it means. Of course, it would help if we were all looking at a visual that explained it. But I encourage you to always keep trying to understand, because this is what I have found with my clients who get a regular investment letter from me, at least every couple of weeks, is that the more that you attempt to listen and make it make sense, the more likely you're going to get to a day where you're going to go, well, that made totally perfect sense to me. And then the more that you listen, the more that you reinforce that. I will be the first to admit there are levels of economic commentary that I have to really think through to understand. And there's certain types of trading that I have to really think through to understand. So I'm not immune to that by any stretch of the imagination. But I think that you really got to work hard to try to figure out what all of this means as far as the trade war that we're in. And it's funny, Treasury Secretary Bessent, I think is his name, today said that he was hesitant that he wouldn't call what's happening between China and the U.S. as a trade war. I don't know what else he would call it, but that's, of course, the political response. And I think that they've ruffled enough feathers here in the last week or so, almost a full week. No, actually, it is a week of market volatility and the market going all over the place. Well, the wind it did not stop today by any stretch. The market was down to pretty much flat most of the day, and in fact, reacting to China, who increased the tariffs from 34% to 84%. 84%. I think we're at 105% or 104% on tariffs. I'll explain more of that, what that means in a second. Yeah, yes, ladies and gentlemen, it is a real trade war. But the real news came out when President Trump announced a 90-day pause on 75 countries who have come up and said that they want to negotiate. And for once, the market really liked that, and we had the S&P 500 up 9.5%, the Dow Jones up by 7.8%, and the Nasdaq up 12.16%. So what do you really take from that? Well, as one financial advisor said on the radio, on CNBC, not the radio, on CNBC today, he said, the market's going to be all over the place. This is not the ending of this. And though it does feel good right now, I'm sure we'll see a lot more ups and downs in the market. And I think he's right. It's something that that you like to see, but rebounds are very big and violent. It's the best way I can describe it when you're talking about scenarios such as this. And it'll be interesting to watch as these tariffs go into effect with the price of certain goods and services from China. Will they really double? That will be what we'll watch and see the effect of this trade war with China. And the U.S. sells $143.5 billion worth of, and we'll just call it stuff, to China, where China sells $440 billion to us. I mean, we buy way more from China than China buys from us. And there is where you get your trade deficit. And a lot of some of the reasons why people buy imports is because it's cheaper. It costs them much cheaper labor to make the widget that China sells. I had someone ask me, "What's a widget?" It's just a fictitious product. But the widget that China sells to the U.S. and to sell to our consumer base is going to be a whole lot much. I would assume will be a whole lot more expensive. But the more importantly, I think that we have to look at some observations so we can kind of figure out where we are with all this and what could be ahead of us. And we start with the bond market. There was a lot of rumor today and speculation about a lot of things, but mainly that President Trump, although he's been firm with his stance and taking a very strong stance in trying to change the balance of trade quickly, I think that, and I agree with this speculation, that it's speculated that he saw what was happening in the bond market and thought, if I don't do something, we're going to have a problem, because the bond market got smacked. That's about the best way I can put it. And we've talked about this many times, is that the next financial crisis, and if we're in it right now, then this one or whatever is to come, looks like it's going to heavily involve the bond market, which is something we haven't seen. Now, let me explain what I mean by all this. When you think about the bond market, think about one type of bond. It's a U.S. Treasury bond, and it's the 10-year U.S. Treasury bond. It goes, you invest money into it, you buy a Treasury bond, you hold it for 10 years, and you get dividends along the way. So that particular bond and whatever the interest does with that bond, the bond's interest rate or yield, is very important because that is what the world looks at as the direction of interest rates. We talk about the Federal Reserve Board setting interest rates. All they do is they set a benchmark and they say, this is where we think interest rates are going to be, and everything adjusts to that interest rate. But the truth is, the bond market is where you find what's really going on with interest rates. Remember, a bond is a debt instrument that the company, the government, whoever that bond is with, that issues that bond, is borrowing money from you, and they're going to pay you interest along the way until they get that bond back and they pay the debt back to you. I hope that makes sense. So, for instance, you pay $10,000 for a United States Treasury bond, a 10-year Treasury bond. You give the government $10,000. They start paying you interest payments, and they're borrowing that money and they're using that money. Then at the end of 10 years, they're paying that money back to you, and you get your money back, and everything is great. So the thing that you need to know, and this is real important to understand, is that when bond prices go down, like they did dramatically this morning, in fact, there was some talk that this was the worst day in the bond market since 2008 during the financial crisis. And you don't want anything to be compared to the financial crisis, of course. But there's an inverse relationship between interest rates on bonds and bond prices. We've talked about this, but let's go over it again. As a bond goes up in price and becomes more valuable, and to buy that bond it costs more money, then the interest rate goes down. So bond prices, when they go up, the interest rate goes down. When the interest rate goes up, bond prices go down. And that's what was happening this morning. In fact, interest rates and bonds just absolutely took off and went way over where anybody really thought that they would be, signaling that there is trouble in the bond market. Now, the government did sell a bunch of Treasury bonds today in what's called the Treasury auction. But and that kind of surprised them that buyers showed up for that. But I'll get more into that. This is Bob Brooks. Stick around. I'll be right back.
Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern-day steward movement.
Is that obstacle in your life stopping you or strengthening you? Thursday on Focal Point, Pastor Mike Fabarez reveals 3 surprising ways God gets our attention and why the most uncomfortable path might be exactly where we need to be. Skip the confusion and learn to read the road signs of your life. Thursday on Focal Point with Mike Fabarez. Focal Point, weekday mornings at 8:30, here on Bible School Radio, KDKR.
When life's going well, it's easy to take things for granted and neglect our relationship with God. But when times are tough, we're quick to pray and ask the question, where is God? Thursday on The Verdict, Pastor John Monroe explores what we should do when our prayers seem unanswered. Don't miss Thursday on The Verdict.
The Verdict, weekday mornings at 10:30, here on Bible School Radio, KDKR.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. If you got a question for me, go to the website, top of the page, Ask Prudent Money. Click through, send it. We'll get you taken care of. That's what we're there for, to help you get some information to make better decisions with what God has given you. Now, we're talking about the bond market, and today, just to think of it this way, bond yields or interest rates on bonds went way up, and bond prices went way down. Best way to, so that's not a good bond market, and that's what we've been seeing quite a bit of. I couldn't help but think about Mark Pfeiffer, who comes on the program, and he of course is a mortgage consultant, and to watch these interest rates go all over the board must be tough when it comes to mortgage rates, and it will be interesting to see what mortgage rates come out to be tomorrow. So the bond market was in trouble, and so the speculation was that Trump had better jump in there and do something, because he risks losing control of that, and that might be a little bit even more important in the stock market right now. So why is what is the problem with the price of bonds and investors selling bonds and driving the interest rates up? The problem is that investors are looking at bonds a little differently this day. Used to, and to an extent right now, bonds were a safe haven to go to. That's why we've been talking about in normal times, the bond prices go up because people buy into bonds and interest rates go down. But this totally happened, that was happening for a while. And then today we had this big surprise with the bond market really going down and people selling bonds. So it's people are a suspect of buying our debt, which is not a good sign. So we want to definitely keep our eyes on what's going on with the bond market. That was a little bit of an update. In fact, there was some thought that investors were selling and going to the safety of cash. And but who knows what the real reason was. The bottom line is bond prices went way down and your interest rates went way up. And the problem with that, another problem with that, is it increases the borrowing cost, because that's what interest is. It's a borrowing cost for businesses and consumers. As I mentioned a second ago, with mortgage rates, you want to be able to see something stable and to see those rates go down so that you can get the real estate markets moving again. So are we in a crisis in the bond market? It's tough to say, but we will see how this plays out tomorrow, and I'll let you know. The U.S. dollar, my second observation is the U.S. dollar has declined in the value along the side of stocks as the stocks have declined. Usually, like bonds, the U.S. dollar is a safe haven for people to go to and put their money in money markets and cash and that kind of thing. That's a little bit unusual. Another observation is that get used to big swings in the stock market. Like I said, I seriously doubt that this is all over with, even though we did have such a big day today. But if you remember back what happened in 2008, much the same thing happened as far as these real big moves up and these real big moves down. And that's what bear markets, even though we were I think we were classified as a bear market this morning, but that it all depends on what happens when the markets close as to if that is the case. We've crossed that line where you'd call it a bear market. But most importantly today, I want to talk to you a little bit about your 401k plan, because in the downside that goes along with watching Financial News Network, CNBC, that type of thing, all day long is you have to listen to everybody's opinions. And after hours of that, that gets a little bit old. But what I want to make sure that you have a good idea of how you should approach your 401k plan. And I get this question asked a lot, and I try to keep the answer to this very, very elementary, because I think it really is easy to look at it this way. You want to know what percentage is in stocks versus what percentage is in bonds, and inside that bonds category would be bonds of any kind, short-term bonds, money markets, stable value funds, that kind of thing. So you want to know, do I have 80% in stocks and 20% in bonds? Now, I know I just said bonds had a very bad day today, but you can still look at, there's certain types of bonds, just like there's certain types of stocks that you look at. But let's stick with the overall framework first. If you have 70% of your 401k in stocks and 30% of your 401k in bonds, then you are definitely favoring, obviously, stock risk. And so you're taking a little bit more than risk than your bonds. Most people will call a 60-40 portfolio as something that makes the most sense, where you have 60% in stocks and 40% in bonds. You may look at it and go, wow, I only want 100% in stock, or I want 100% in bonds. You're either real optimistic about the stock market or real pessimistic about the stock market. But you got to pick exactly what percentage you want where. How much you want in stocks, how much you want in bonds. If you are just kind of in the middle, there's nothing wrong with saying 50-50. But settle in on something that you feel comfortable with, that God gives you a sense of peace about. And it goes without saying, we want to pray our way through the process, just like everything else that we have in life. And look for God's peace as to where we land. As far as stocks go, bonds go, though, once again, I would look at, and this is not a recommendation, this is just an idea. I think that the chances of having a better luck with the investments in bonds is if you do money markets and if you do stable value funds and that kind of thing. So very, very low risk type of bonds. On the stock side, you can take risky stocks all the way down to very conservative based stocks. And that just depends on what exactly you're looking for from the standpoint of how you want to invest your stocks. But it does really come down to that 50-50, 60-40, 70-30. And just look at it this way. It's not something that you have to commit to for here on out. It's just how you feel today. And I always go by the three steps. Determine how much risk you're taking. That would be determine how much is in bonds and versus how much is in stock. And consider that stocks is the riskier place to be. And you got to base that on history. And that's what history says. Stocks are more risky than bonds. That could switch. Nothing's guaranteed. But you got to go with what history says. Then pray about it. Make sure you're at peace about the risk you're taking, and then make changes if necessary. And that's the best way to do it. I can't tell you how most people I've talked to throughout the years have faced this in two different ways. They've either taken the statement and put the statement in a drawer, not opened it, don't look at it, and what you don't know won't hurt you, versus opening it up and looking to see what the damage is, or maybe not. Maybe it was a good result. All I know is you can't determine what kind of risk you're taking if you don't do a little bit of work looking at what your statements say. I think it's extremely important to make sure that you know how much risk you're taking and that you're at peace about it once again, that you've prayed about it and you're seeking God's peace. This It's about God. I want to be the best steward I can with what you've given me. Help me, give me wisdom as to what and how to handle my 401k plan. Run it by your financial advisor, obviously. And or if you don't have a financial advisor, you can run it by me, and I'm happy to take a look at it and give you an opinion as to what I think. The bottom line is know your risk. Like I said, I don't think that this is by any stretch over just a big day in the market, just like there was a big day in the market on the downside that we saw a lot last week and into Monday. But hope that made sense. If it didn't, you can always go to the website, www.prudentmoney.com. And when you go up to the top of the page, you'll see the Ask Prudent Money. That's where you click through and you go to your questions, send your questions in, and I'll get you taken care of. And as far as tomorrow, we'll talk about what happened during the day. Hopefully we can get to some other topics and talk about some other things that I think that you need to know about. But as this is the top story, I want to make sure that you know and have a good understanding of what has happened. Well, if you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.